So yeah, I mean, just to recap, I'm Stephen, this is David, and we're both directors at Oldland Consulting, which provides, I mean, to all our clients, it provides a service of managing and tracking through completing their R&D tax credits on their behalf. Okay. David started the business, I think it was 12 years ago, having seen an opportunity for a niche consultancy business, seeing or reading literature and seeing examples where businesses were finding it hard to navigate themselves through the claim process. It is complex. It's the parameters and the definitions on the HMRC website are lengthy, and it's something that David then took upon himself to handle a claim for a client, and off the back of that, the business was born. We're going to go into a little bit more detail about the business credentials, but we'll do that at the end, and I think we should probably get into the presentation itself. Just to give you a bit of background, David's career has been mainly in managerial director roles, mainly in finance in large organisations, and myself, I've had a variety of managerial and senior manager roles in actually large cosmetics firms. So we've got a bit of a diverse background across the both of us. So bear with me as well, I've got a sinus infection and I'm struggling a little bit. So just to go through what we're going to talk through, so we want to keep it fairly straightforward and simple for everybody. There is a lot more behind the topics we're going to talk through, but just to give you a ballpark in each sort of main area. So what are R&D tax credits and why do they exist? Obviously that's fairly straightforward. It's just going to give you a definition in terms of why they've been introduced. The different schemes available and the potential benefits they carry. So there are two, in a nutshell, there are two schemes. How they can be used across different businesses can vary, so we'll go a little bit into that. How does a business qualify for R&D tax credits? So we'll look at actually what qualifying activities can be included within a claim. What costs can qualify, so that's really digging into the actual expenses that a business incurs that can be part of a claim. And then a little bit about ourselves, Oldland Consulting, and our service and our achievements. Okay. So what we have is this. I took this definition off the website. I don't actually know where it's from. I just saw it. So research and development tax credits are a UK tax incentive designed to encourage companies to invest in R&D. It's very straightforward. Investing in R&D has been a key strategic initiative of the government since 2001. Is that correct? 2001. Yep. So it's been in place for a long time. It has changed over that time. The schemes have changed. Mainly, they've added to the schemes in terms of what they give or what the benefits are, the rewards are to a business. So we probably won't cover that today, how they've changed, but that's something we can do on a separate individual level if you'd like to know. And then companies can reduce their tax bill or claim payable cash credits as a proportion of their R&D expenditure. It's fairly straightforward. But how that's actually done is actually quite complex. Okay. So in terms of the different schemes available, we have an SME and an RDEC scheme. So the SME is quite straightforward. It's the small to medium-sized enterprises that fall into that bracket and that scheme. And then we have research, development, expenditure credits, which actually caters for large organisations. But obviously they have one common objective, and that is to reward innovative businesses.
And it's probably just worth throwing in there that the RDEC, Research and Development Expenditure Credit, there isn't an occasion where an SME can benefit from that scheme. So we'll tell you a little bit more about that. But when the two schemes were envisaged, one was for SMEs and the other was for large companies and organisations. But eventually a little opening appeared in the RDEC scheme, and we now have a route to benefit some of our SME clients with an RDEC. So I'll hand back to Steve.
Yeah. We've got some characteristics here of both schemes. So SME is defined as an organisation with less than 500 full-time employees. We've put that up there. It's not very often that we're looking at the parameters of an organisation and what scheme they'd fall into. We generally know which one a business will fall into. Generally, a small business is quite, or medium-sized business is quite easy to identify, and the large organisations are also quite easy to identify. So the SME tax credit scheme allows for businesses to enhance actual R&D spend by an additional 130% for tax purposes. So in a nutshell, you would calculate your R&D spend and you'd be able to obviously times that by 1.3. So in addition, so in reality, it's 2.3 of the actual spend. This either reduces the profit or enhances the loss of a business. So that's fairly straightforward in terms of what it does, but actually what can actually happen, I think as it mentioned in the, it can take obviously a small business or a medium-sized business from a profit into a loss, where you will end up benefiting from both a corporation tax saving and a payable R&D tax credit. So I think this SME scheme will then either provide a CT saving and generate a payable R&D tax credit based on the loss of, and you will get 14.5 pence in a pound back. Often a client will receive a full CT refund and a payable R&D tax credit, and that's actually when you've taken a profitable business and actually taken it into a loss-making business. So you'll receive a combination of benefits. For the RDEC scheme, the current RDEC scheme replaced the often criticised original large company tax credit scheme. That was some time ago. And again, an example of how the schemes have changed over time. An SME can also benefit under the RDEC scheme. This is something David has just highlighted. When they have carried out R&D work on behalf of a large company or have received grants to carry out R&D activities. So that's when a small or medium-sized business has been tasked by a large organisation or a large body to carry out R&D activities on their behalf and being paid to do them. The RDEC scheme allows businesses to claim 12% of the overall R&D spend. So whereas in the SME scheme, you are able to take your overall spend and actually enhance that amount of money. In the RDEC scheme, it's much simpler, and the government allow you to just take 12% of that spend. That actual benefit is an above-the-line payment, which is going to be subject to corporation tax as well. Okay, that's really top level in terms of both schemes available. Obviously, there is a lot more behind it, and we can talk to any. If you have any questions at the end of the presentation, we can go into it in a bit more detail. I'll hand over to you, David. To do this before I start coughing.
Great, thanks, Steve. Purpose of this is just to try and explain how the scheme works for your company financially, and obviously one of the things we've said already is we've got profit makers and loss makers of clients, but about the UK's R&D tax credit scheme, it's irrespective of whether you're making profits or whether you're making losses. This is a route to put cash into your business. So what we've got here is we've taken £100,000 of qualifying R&D spend, and that's constant in all of these columns. What changes is we're showing a company making profits of 200,000, and then in 50,000 intervals up to a £200,000 loss. And perhaps just to pick on a couple of examples, the first one, let's take a company that's made £100,000 profit. They've also spent £100,000 on R&D, and Steve was explaining the R&D enhancement that we have. So in the case of, if the company had just made £100,000 profit with corporation tax at 19%, it would have had a tax bill of £19,000 to pay. But it's also, as this particular company, as we've said, has also spent £100,000 on R&D. So our job is to come along, help find that £100,000. Once we've found that, for tax purposes only, we can enhance that £100,000 by an additional 130%, i.e. £130,000. So the enhanced R&D value is not £100,000, it's now £230,000. And what this does to the company's profit and loss account for tax purposes only is it turns that £100,000 profit into a £30,000 loss. Your accounts still show £100,000 profit, but the tax calculations are now showing a £30,000 loss. And what that actually means to the business, if you've already paid your corporation tax of 19,000, you'll get that back as a refund. And at the same time, Steve was talking about the payable R&D tax credits at 14.5%. What we basically do is we use the first 100,000 of that 130,000 to save the £19,000 worth of corporation tax. The remaining 30,000 we sell effectively to HMRC for 14.5p in the pound, and we deliver a further £4,350, which is called a payable R&D tax credit. So we make the claim. If the company's already paid its corporation tax, which they often have, they will receive a cheque back for £23,350. What we're basically saying there is, of the £100,000 they've spent, they're going to get 23.35% of that back as a credit in cash into their bank account. Let's take another example. Let's take a company that's lost 100,000. And many companies that are doing R&D, because they are investing in their future, they are losing money. And therefore, companies lost £100,000. If there weren't R&D tax credits, that company would just have to carry that loss forward to hopefully, if it survives long enough, to use that £100,000 sometime in the future to save a tax bill in the future. But it needs to get into the future to be able to do that. So we come along, again, we've got a company's set of accounts showing a £100,000 loss. We find that £100,000 that they've spent on R&D. We enhance it by the same 130%, so we've now got an additional £130,000 worth of artificial cost. And therefore, for tax purposes, instead of a loss of 100,000, we've now got a loss of 230,000, but only for tax purposes. It's not making your numbers look bad to the outside world. We actually can sell the whole of that 230,000 to HMRC for 14.5p in the pound, and we would deliver, in that case, £33,350. So what we're seeing is a situation where same company, it makes 100,000, it gets £23,000 back, it loses 100,000, it gets £33,000 back. Now the smallest number on this calculation is if the company broke even, so we've got a profit and loss account of zero, we still find that same £100,000, we still enhance that by 130,000, so for tax purposes we've now got a loss of 130,000, and therefore the 130,000 is sold to HMRC for 14.5%, and we receive £18,850 back. And therefore, what we're looking at there, because we often have clients will say to us, I've spent X on R&D, how much money can you get us back? But it isn't as simple as that. So it depends on how did the company perform financially. And therefore, we are then having to effectively do this calculation. And so usually the answer to that question is, we'll get you somewhere between 19% and 33% of your total R&D spend back. So we always have this sort of difficult moment when you're asking a client how they did last year, and they look a bit awkward and then say, oh, we made a massive loss. And Steve and I are trying not to smile because clearly the amount of money we can deliver is greater if the company's losing money. Not good for a company long term, but it's good for R&D claims. We'll come back to any questions on that later. Are you happy for me to continue? Yeah. Okay. So what we're going to do here, and this is a sort of a little bit of a scary moment because most of you say, well, none of this applies to us. But what I'm going to do is to tell you what the law says, and then I'll tell you what it means. So how does a business qualify for R&D tax credits? The HMRC definitions are that R&D must seek to achieve an advance in science and technology. It goes on to say that cannot be within the organisation. It's got to be on the planet. It actually means, is this company trying to extend the overall knowledge or capability in a field of science or technology? We then move on to, it adds the competent professionals in that business. So if you're a software developer, the developers. If you're an engineer, the senior engineers within the business. If those competent professionals, they have to not be able to readily solve a problem. So basically they're saying, I've got a few ideas, but I'm not sure how we're going to achieve this. So that's a competent professional not being able to overcome and resolve an issue. The R&D activity starts when the company starts to try and resolve that uncertainty. And finally, the R&D ends when the uncertainty is either resolved or the company get to a point where they say, we've worked on this for a year, 2 years, 6 years, we're not able to find that solution, and therefore the R&D ends at that point when they give up. So first message there clearly is failure qualifies as much as success. Now, that was scary, and I'm surprised you haven't all left and gone out the door. Let's say, what does this really mean? Well, in all honesty, who really knows what the state of science or technology is out there in the world? And what we never know is, we could take a very small company, 2 or 3 people working in a small village. They may absolutely be operating as far in terms of science or technology as it's ever been taken. Who knows is the reality. When a company develops some software, writes some code, we don't actually know how clever that code is compared to any other code that's been written. So what the rules actually say, all we really need is our clients to believe that they are clever and they are moving the science and technology forward. And if they believe that, that's good enough for us, and we can make a claim on that basis. And although we're going to say it later, in reality, HMRC have not questioned one of our claims for the last 7 years. So we make claims, HMRC pay them out.
I think one of the points here as well is, obviously the scheme or the incentive has to be defined in words. And, you know, the purpose of the scheme, the objective is obviously to provide support to businesses that are doing innovative things. Defining it in words isn't going to be as simple as actually recognising where that benefit lies. And that's where we have become, or David certainly has become an expert in that field. So it's just to give you an idea is that, yeah, it's difficult to define in words, but in terms of actually recognising where something clever or innovative is happening, it's much more, or when you look at it in detail, you're able to identify that a lot more clearly.
Okay, let's talk about these competent professionals. Whenever a business is in a situation where the clever guys, and we all know who the clever guys in a business are, they're the ones that are developing the products or the process or the software. Whenever any of them get to a point where they're saying, I'm not sure how to do this, I'm going to try a few things. They're doing R&D under the scheme, they qualify. So whenever they're not at that point where I just don't know how we're going to do this, I've got a few ideas, let me try a few things, leave it with me. That's R&D. It isn't, you know, again, we'll say it later, I think, it's not about men in white coats. It's actually about people that are running businesses who are developing products, developing process, developing software. If they are hitting stumbling blocks, then we have a qualifying R&D claim. I think probably we've said enough about that one. We certainly see it as our job to help our clients understand what it is that they're actually doing, because we often find, and I'll give you just a really good example. We had a client and we went and saw him, and he actually picked up a soap dish, it's a metal wire soap dish. We've often seen them in old-fashioned bathrooms, and this was, I think, for a national health job. And he was so pleased with the soap dish, and he kept telling me how clever it was. But when we actually sat down with him and analysed, the soap dish was not the R&D at all. So he started to write a report for us that said, we developed a soap dish. The qualifying R&D was that he had taken a machine that was designed to do some things with wire and make products, but the one thing the machine couldn't do was make a soap dish. And he'd taken this machine to pieces, redesigned it, put it all back together, and then it could make a soap dish. It was the redevelopment of that machine that was the R&D, not the soap dish itself. So sometimes it's not a problem. That's our job, to come along and help a company understand where its R&D really is. But we'll move on. So, not necessarily involvement in white coats. What sort of things qualify? Software, engineering, clean technologies, food manufacturing, agriculture, health, life sciences, bioenergy, anything energy, construction. We've had a discussion about architecture this morning. These are just examples, but any business that is developing anything that has got that uncertainty, so where people don't know how to do something and they are trying to find a solution, that qualifies for R&D tax credits. What costs qualify? So what we're looking for, first of all, people costs, people who are employed by the business, their salaries, the company national insurance contributions, the company pension contributions. So those are the people that are directly involved in the R&D, and they may be doing that R&D, they may be testing that R&D, and some of them, as we go on to, may be supervising or managing that R&D in the second item there. It's also possible these days that if if it's a larger company and they've got an HR director, that HR director's time employing a new developer will also qualify. So we've got people costs, we've then got material costs, so materials in terms of consumables, so any materials that are actually being used in the R&D process, electricity, gas, water, oil, elements of that qualify. If a company is developing software but actually uses other software packages to develop its product, then the cost of that software may also qualify. If the company is involved in building prototypes, and there are many things where you won't actually know if it works until you've actually built one of them, sometimes 10 of them. All of those prototype costs will qualify. The interesting issue, if you get something very large, so if you were building a ocean-going yacht, you're not likely to build a prototype and then just throw it away afterwards. You will probably sell it because it's such a big investment. And therefore, the cost of what's the materials that are sold, so all of the labour costs of developing it can be recovered. All of the materials that are wasted and thrown away will be covered by the scheme. It's just the bits that you actually physically sell to the third party can't be claimed. Finally, probably their subcontractor costs. We can claim up to 65% of the subcontractor costs of, and it's quite interesting. I would say 90% of the time we do claim 65% of the subcontractor costs. historically we've had long conversations with our clients where we've said, you know, if you genuinely believe your subcontractor only spent half of his time doing R&D, then we should claim 32.5% of the costs. But increasingly recently, HMRC literature has stopped using the word up to 65%. They're just saying 65%. So whether there's been a change of heart there, we don't know. But certainly it's something that we're seeing at the moment. Moving on, our consultancy service. What do? Basically, we request the financial information that we need. As we say there, including the payroll, subcontractors, materials, heat and light, financial statements, copies of the tax returns that have been made, if they've been made. We then are able to construct the financial side of the claim. We meet with our clients and discuss the R&D projects that they're undertaking. Now, says their client will be required to participate. We don't say that lightly, actually, because you'd be surprised how many times we walked into a company, been met by the managing director. He'll say, great, shake our hand, walk us to the door of the finance director and say, yeah, this is John, he's our finance director. He'll give you everything you need. Truth is, the last thing the finance director knows is anything about the clever stuff that's going on in the company. We need to talk to the clever people who are making the products. So finance director, very useful for all those numbers and things, but he's not the man to talk to if you want to know about the engineering project or the software project. He just counts the sales. He's not actually looking at the, sorry Andy if you're offended by that. So we then can put together what we're looking for is specific R&D projects that have been taken place in that company during the last 24 months. So we can go back 2 financial years. If we're sitting here in December, we can currently make a claim for the December 2018 year end, and until the end of this month we can make a claim for the December 2017 year end. As soon as we get to the 1st of January, that 2017 claim has gone and been missed, and therefore the 2 historical claims then will be January 18 and January 19. Once we're happy that the claim is robust, compliant, we provide our client's accountant, with the numbers that he needs to include in the amended tax return. The client's accountant does that for us, and at the point where a replacement tax return is being filed, the client's accountant submits the numbers, the detailed numbers, to HMRC in the form of the tax return, and we send in what we call the supporting evidence pack, which is a financial report and a technical report to support what that company have done in terms of R&D. So if it were that £100,000, we would give them an item by item composition of that exact expenditure, invoice by invoice, employee by employee. Once the claim's gone in, generally speaking, 28 days or so later, HMRC will make that payment. This has been 2019 was a particularly difficult year because HMRC was swamped by claims last December, and in fact have taken until October to sort out the backlog. And at one stage, that 28 days had stretched to 4 months for SMEs and 10 months for the RDEC claims. We're not quite sure how they managed it, but I think it was a weekend either late September or early October. It all went correct again.
They must have thrown a lot of resources.
weekend's overtime or something. But it just amazing that it just, I mean, we all know what it's like to have problems in a business when you've got a backlog and you're trying to catch up. How you can just catch up in a weekend, I will never know. But they did. Right, okay. We're getting towards the end, you'll be pleased to know. 11 years experience, 730 claims we've made. We've delivered over £30 million to 228 clients. As we've already said, HMRC have not asked any questions about any of our claims, and it's 7 years this month since the last time someone asked a question. The average claim we make is £41,446. And what's really odd, 11 years, the average claim for us has remained very close to that £40,000. Even though the benefits have increased, we've probably just taken on increasingly slightly smaller clients. And it is interesting. We did a claim not so long ago for one of Andy's clients. I think the number was very, very similar to that 41,000. But they range from probably £6,000-7,000, up to a couple of £100,000. So we do about £5 million worth of claims each year. There are 4 senior analysts who take responsibility for the claims. I'm one of those, Steve's one of those, and then we have a couple of other very, very clever chaps. We work on a success fee only basis. Now, a bit strange, I could never have imagined after my sort of corporate life of actually working on that basis, but in reality, 10, 11 years ago, if you'd knocked on someone's door and said, I can get you a load of money back, I'll just pay me £5,000. They would have laughed and thrown me out. So the whole concept of if you never receive anything from this scheme, you will never receive an invoice from us. That seemed to work, and therefore we started that 11 years ago, and we've continued with it. There are no extra costs at all. We also have a view, we've seen competitors' consultancy agreements or contracts even, where you're locked in for a period of time. We don't attempt to lock our clients in. We actually want our clients to want to work with us, not ever have to feel they've got to work with us. So any of our clients, if they want to go, they can go tomorrow. The strange thing is, they don't. And what we've also found is, if we actually looked at our consultancy agreements, and many of them ran out a long, long time ago, and our clients just carry on working with us. My view of a contract has always been, if it's a good relationship, contracts are put in the bottom drawer and should never need to be looked at again. And that's the basis of our relationship with our clients, and it seems to work. The reality is, with these sort of schemes, the minute you've made that first successful claim, you've now got a friend for life. And we often see our clients' accountants change, but for some reason they keep working with us, which is good news. We don't advertise. All of our clients are actually introduced to us by somebody. We did once spend, I think, £3,000, £3,600 a year on Google. And then we had a marketing consultant in who told me that we should be spending £50,000 on marketing and advertising. So I turned the £3,600 off, and it didn't seem to change anything. We did get some, I've got to say, early days, in the beginning of that 11 years, we got some interesting clients that we still have from Google, but that's a long time ago now. So our goal is to get a business what it's entitled to, no more, no less. If a client ever suggests to us that we should in some way enhance the claim beyond what it truly is, they wouldn't be a client for very long, because this is all about trust, and clearly HMRC trust us, and we would never want to damage that relationship that we actually have with HMRC. It's far too valuable for the sake of getting someone an extra £10,000 or something. I think that's it, Steve.
Yeah.
Thank you. Thanks for listening.
Fabulous. Thank you very much.
Thank you.
What we'll take is a quick break, quick comfort break, and then we'll come back for questions and answers